Hello everyone, welcome to my YouTube channel. André Cardoso here. As always, thank you very much for being here, and I hope you enjoy this session. For today I want to share with you some of the charts that I used to share with you, or at least I want to try to update some of those that I shared with you before. And let's start with the cable. The cable, it has printed a bullish sharp pattern. This most recently a 224% Fibonacci extension. I saw a small reaction here after completing the sequence, after completing the pattern, and I decided to take an opportunity, to take an attempt to go long with the cable, but the market has synced immediately, or at least overnight, after a nice reaction or an initial reaction, the market hunting my stop. So basically the price has found support at the 78.6% Fibonacci retracement from this bottom, and also the weekly fractal support, which was forged last, or at least the beginning of the month of May. So at this point, this is a nice bounce for the cable. I need to see what type of structure the price is building here. I don't think this is an impulsive swing. I like the strength of this movement, and it looks like, well, at least we have a third wave already being printed. Let's see if this is the third of a 5 or a third of a third wave correction, a corrective structure with a three wave structure. At this point, I can also see this as a potential heads and shoulders. We have kind of a, you have this bounce, the head, and then a reinforce of the next zone or the previous structure highs. As you can see, the price rejecting this, so we have kind of a next zone here. If we draw a trend line, we can see kind of a retest of the next zone after the violation above the resistance. You can see the price pulling back a little bit, trying to retest this structure. So this may act as an inverted head and shoulders, and if that happens, eventually we may see the cable trading back to this daily fractal support again. So the reason why I'm pointing, the reason why I don't know which type of structure the price is building is because it may look as a strong movement, but it can all change if the market decides to pull back again. So at least for now, I can see those three wave structure clearly. So, and let me just check, by the way, so you already understand this perspective for the inverted head and shoulders. Let me just try to clone this previous structure swing. So eventually kind of a symmetrical projection a few points above the recent highs. So that may offer some pressure once completed. Let's see what, for now, nothing to add for the cable. In fact, it may act as the handle for the cup. Usually I don't want to see a deeper pullback to form that handle. Well, but it's one of the possibilities is to see these 78.6% Fibonacci retracement level being used as a major support, and the cable will recover, or will at least attempt to create a full recovery after this fall. For now, nothing to say, just to point that we are also at this point trading above the 38% Fibonacci retracement level. We can see clearly pressure moments at the 38% Fibonacci retracement there, small pullback, and then a violation again above these levels. So we're still trading around this 38% Fibonacci retracement level for the cable, but nothing specific to add at this point. Euro versus dollar, very similar situation, eventually friendly than the cable. So I see also an inverted head and shoulders here, and we can see this very similar situation here with the neck being retested. So we can see the euro versus dollar now reacting above this neck zone. So let's see if it will be enough to put the price trading those default target zones. We have also a bullish scrap pattern which was projected at 119.18, as you can see, also pushed below the completion point. And so let's pay attention to this step-by-step process. First of all, the 200% Fibonacci extension, which is the default target for the inverted head and shoulders, or at least my projection. And then we have the Fibonacci retracement levels between the 38-50% and the golden Fibonacci extension levels as default targets for the crab pattern. Let's say if the price needs to find default targets for this pattern, we need to pay attention to these Fibonacci levels, specifically the 38% Fibonacci retracement, which is the very first level for as a default target for the pattern. Now, Australian dollar, similar bullish alt-bat pattern completed, or this major bullish alt-bat pattern completed at 113% Fibonacci extension. We are trading our first target zone after the violation of this neck. Let me try to show you this. I don't know why. Okay, below this neck zone, this is also the target zone for that minor heads and shoulders, but we have also this higher degree one, which if it starts to work, we may see the Australian dollar trading back to 70.86. So I will not be surprised to see that happening. Again, it's a step-by-step process. I don't expect that to happen in a 24-hour session. So, but I believe in a step-by-step process it may happen to see the Australian dollar trying to trade even lower. So, but of course, even if I have all the ingredients pointing to that price zone or to that zone, I never know the outcome of those sequences. For now, we're still threatening this previous structure support at 75.32. So we still need to vanish with this price zone or to this previous structure support. We have a new support already printed below. So we still need to trade to see the price trading lower. For now, I'm focused on these potential bounce for the Australian dollar with default targets for that pattern at 76.27. Let's see if the market has strength enough to put the price trading there. But below we have a very similar situation as on cable, euro versus dollar, with the market forming kind of an ascending parallel structure, and we have already a 3 waves structure inside these channels. So at some point, or we have 2 options. One of the options, this is just a third wave of a 5. We will have a new pullback and then the 5th wave, or this is just a correction and at some point the market will trade lower. So if I need to suggest something for this structure, we need to see what the price will do inside this ascending channel. Of course, a violation below this trendline support may suggest a retest of the bottoms or even more downside. And very similar for the cable and the euro versus dollar. Actually, the cable not so clear. It's not a perfect parallel structure. If you draw a parallel, you still need a retest of the highs of the channel. Euro versus dollar, very similar with a kind of a parallel structure also. So for the Australian dollar, I will not be surprised to see one of those 2 options. One of them, a third wave of 5, or the price starting to stall here and starting to make a pause, and eventually the market will keep trading lower. The Kiwi, similar situation, inside one ascending channel, 3-wave structure. I want to see a third wave of a 5 for the Kiwi. That's what I want to see. I want to see the market at some point pulling back and then new high. And based on what we have and based on what I need, not based on what the market will offer, but based on what I need something like this. A first swing high, completing the sequence, actually a bounce from after completing the bullish shark pattern. First wave, the pullback, second wave, I need to see the price now squeezing kind of a rally just for me to the 50% Fibonacci, and then a pullback in the fifth wave equals the first one, so eventually something like this. But of course I don't care if the market will print me this sequence. I just need to see the price trading these levels. That's actually what I need to see. So I shared this opportunity to go along with the Kiwi. This was the one that I selected to push and to try to create an attempt, a friendly situation to try to go long. So let's see if this one will work in our direction. Of course, if you expect euro versus dollar, the pound and the cable and the Aussie to trade higher, most probably you expect the dollar CHF and other dollar related pairs to start to trade lower. Dollar versus CHF has found resistance just a couple of points above the 224% Fibonacci extension level, completing the bearish shark pattern. So basically we wait for the price to fall to the 50% Fibonacci retracement, 90.81. Dollar versus the Canadian dollar, we have no clear or specific pattern printed similar as we have on the CHF with that 224% fee. We don't have that sequence for the Canadian. Three-wave structure inverted with all those that I showed you before. Three-wave structure. Let's see if this works as a correction after a sequence or a period trading of a moment trading higher. So this bullish momentum, after this bullish momentum, if this is a correction and the market will keep trading higher, or if the market will keep sinking into a third of 5 waves. And this, when I talk about these sequences of 3 and 5 waves, I don't know what the market will do, but well, at least I have one first very strong swing, a bounce, and the market is starting to print a third wave right there. So at this point I can interpret this as the third wave of a correction, and in that case at some point the market will start to trade higher, or this is just a third wave of a potential 5 wave sequence. Okay, so this is pure speculative prediction. I don't know, and I don't care because I don't trade based on those sequences. Of course, I'm just pointing to the possibility for more downside momentum or the eventual reversal or a bounce from after a sequence of 3. The market always, and of course if you are an experienced trader you don't need to listen to this, but those who are learning process, the market always move in 3 waves as a minimum. So in order to print a structure, the market needs to print a 3 waves minimum in order to complete that structure. You can't identify a triangle or a flag or whatever you want to identify. You can't identify a sequence or a pattern inside the market with 2 waves. There's no patterns completed or formed within or inside the 2 waves sequences inside the market. It doesn't happen. So basically we need to see at least a third wave or a 5 wave structure, a 8 or even more complex wave structure, but at least there's a minimum of 3 waves that we can try to identify. So basically I see a clear three waves structure at this point. I want to see if the price will pull back even harder, but at least this is what I can see. I don't know what will happen next, but I believe I can see, and you can see also what is there. So we don't need to we don't need to question. So some things that's so clear for us, I don't need to question myself. Is that real a three-wave structure? Of course it is. It's here for everyone to see. I don't need to. I'm not inventing the price chart or the, you know. So we are not trying to. This is not something that some of us may see and some of us may not see. So everyone can see this. That after this resistance, the price falls into a three-wave structure for now. So, and that can give sequence to a five-wave structure or a three-waves correction. So that's what it is. At this point, for the Norwegian krone, and jumping to the Norwegian krone, I will not be surprised to see the Norwegian krone finding support at this previous structure resistance or close to these levels. We have also an horizontal fractal resistance at 42.09. So basically, I will not be surprised to see the Norwegian krone also searching for lower prices to find support. As we can see, I projected some patterns above this one at 113% Fibonacci extension level, and as we can see, never completed above. So let's jump into the Mexican peso. Very similar, actually, as you can see, all of those pairs that I show you until now with three waves structure, and this one looks like a nice third wave sequence. So eventually we may see this is the third wave which is extending, and we may see something like a five-wave structure down for the Mexican peso. But again, I don't know what will happen, and we have what it may act as a bullish scrap pattern at the previous structure resistance. So we can see kind of a trend line connecting these highs right there. So we have this trend line resistance from the previous structure, which may act as a support. So I'm pointing to 2017, or let's say the previous structure resistance 2021 for the Mexican peso. Let's see if the price will find some pressure at that zone. Note that we are also trading the bearish shark pattern completed at the golden Fibonacci level, which implies, or at least will suggest, not implies, but will suggest at least the 50% Fibonacci retracement. So 2017, it's a default target for this bearish shark pattern printed above. Okay, 2059, 2017. So moving forward, dollar versus the Japanese yen. A couple of patterns being completed for the Japanese yen. Some of them, actually one of them didn't complete at all, and after the price touching that 88.6% Fibonacci, completely ignoring that Fibonacci level and being pushed into new highs. So at this point we have one eventual bearish shark pattern projected right at this monthly fractal resistance, the previous structure highs from the first days of April or the last days from March. So that being said, we are approaching the monthly fractal resistance, the major resistance level, and we have a potential bearish shark pattern right there at 110.96. So this is where the pattern will complete. Of course, after completing that sequence, we expect a retracement, and that retracement by default searches for the 50% Fibonacci retracement level, so which is now projected back to 110.34 dollar versus the yen. Japanese yen, the cable versus, or the pound versus the Japanese yen. What a nice movement and a nice recovery from these golden Fibonacci levels there. Nice convergence reinforced by a fractal support. I see this as also as an inverted head and shoulders, not as a cup, as an inverted head and shoulders. So at this point we are already trading the 78.6% Fibonacci retracement. So we have already almost a full recovery after the recent fall for the cable or the pound versus the Japanese yen. Golden Fibonacci extension may offer some pressure. We are trading a few points below that Fib extension level. This level may offer some pressure. We are also back to this trend line resistance. As we can see, we are approaching this trend line. Let's see if the price will break above this structure. If that happens, that may increase the probability for more upside momentum for the pair. New Zealand versus the Japanese yen, another great attempt to recover after the recent fall. Golden Fibonacci 76.53, nice recovery from this shark pattern, which is now approaching the default target zone 78.20. We are approaching the previous structure support, fractal support, and the default target for that pattern also. Euro versus the pound, what a mess, but at some point very constructive. A lot of nervous inside these small ranges here, but of course we're still trading in the bearish. As you can see, we're still trading this descending momentum here, and I'm pointing to 85.22, which is the completion point for the bullish shark pattern. So as we can see, we have a nice reaction around the golden Fibonacci level, or a few points below the market, printing a technical double bottom. Default targets for that pattern, of course, reached, but then later the market starts to threat this fractal again, as we are now facing again. So basically, if the market decides to sink a bit more into this price zone, to the 224% Fibonacci extension level, that may offer another bounce. Even if limited, it may offer another bounce. So we expect something like a retest of this previous structure support level again. After completing this sequence, we expect the market to bounce towards the previous daily fractal support for euro versus the pound. Pound versus the New Zealand, potential technical double top under formation right there. So pay attention to the bottom of the structure. A violation of the support should trigger one technical double top being formed there. So we wait for the violation of the resistance, or the previous structure resistance, which is now support. So we wait for the violation of these lows, which may imply more downside. We have also completed the bearish crab pattern at the golden Fibonacci level, which also implies or suggests at least a 50% Fibonacci retracement back to 97.67. Limited, correct, but that's what we expect after the formation of the pattern, and that may help to trigger that should trigger the technical double top also, so which may suggest more downside. Now, gold and silver, I shared this eventual bullish crab pattern for gold at 1742. And of course, I don't know if the price will complete that sequence or not. For now, I still projecting this as an eventual parallel structure, but I don't know what the market will do. It can print as something like kind of a small triangle there, but it doesn't look complete, at least for me, in my opinion. It doesn't look completed at this point. Something is missing at least here. In order to see this as a triangle, I need to see gold trading a few points lower, eventually one attempt to retest the previous structural lows, and then finding support. Then we can think about that eventual triangle there. but I think something is missing at this point, so I need to wait and observe. I admit the possibility of a breakout above the resistance, which may trigger more upside for the gold, but I prefer to wait for the completion of one eventual bullish scrap pattern. So if this pattern completes at 1742, that may help also the completion of a third drive. Let me try to draw this. A third drive formation, so basically one second drive, a bounce, and a third drive completing the sequence. That may increase the probability for a bounce after completing those sequences. So I prefer to wait for that to happen. Very similar for silver. We're still trading inside what we can. It needs to be adjusted, constantly adjusted, but I still think there's something missing here, but it can be kind of a parallel structure or whatever, or one descending wedge. I need to wait to see what will happen, even though I need to see the completion of that crab pattern at 2542. So this is where the bullish crab pattern will complete. 1 hour time frame, 60 minutes. Look at this channel for crude oil. Look at the midline. You can activate these middle line channel, so you can activate this one on your options. And as we can see, the price using this midline as element of pressure, or let's say an element of support, or kind of a pivot zone for the channel, where a zone where the price will react and use that line as a support and resistance levels. As you can see, the market respecting these channels. So we're still trading inside that channel, but now, as we can see, we are facing 73.86. We are facing the bearish butterfly pattern on crude oil. Okay, so I will not be surprised to see crude oil starting to pull back a bit from this price zone. Of course, we don't know the outcome, as I always say, but I do expect the pullback for the crude oil back to, and of course this can be different from broker to broker. This is Wanda, West Texas Oil. This may change from broker to broker. That will depend the instrument that you are trading, but in general, I need to see oil starting to pull back at least 38% Fibonacci retracement of the last swing high. So this last swing high, a retracement of this last swing. That's what I expect. Of course, it can fail, and if the market starts to fail, I have another projection above. But at this point, I'm paying attention to this potential bearish butterfly pattern. Of course, the golden Fibonacci extension may offer some pressure also, but at this point, and based on the ratios that we have, I'm pointing to this bearish butterfly pattern for the crude oil. Okay, let's finish with some equities, or the SPX 500, German DAX, and the Nasdaq. SPX 500, I shared these charts the start of the week. I shared this one on Twitter, I believe, and I said this is what I need, not what the market will offer, but of course this is also what I expect the market to do. So I was expecting the formation of one inverted head and shoulders for SPX 500. I think we can see these as an inverted head and shoulders because the market has found some pressure at this previous structure resistance and starts to pull back a little bit, and then it breaks above the resistance, completing or let's say validating the inverted head and shoulders. So that pattern targets 43.14. So this is a pattern that by default may put the price trading at new higher highs or new historical highs for SPX 500, which is nothing too strange or nothing to admire, because that's what usually the SPX 500 do, printing new higher highs, historical higher highs constantly. So basically we wait for that to happen again, or at least I'm waiting for that to happen again. The German DAX, it may follow the same expected reaction for SPX 500. If you expect equities in general to trade higher, I do expect the DAX to follow in general the same momentum, not the same price structure, not the same patterns. Eventually you'll see, as you can see now, we can see the DAX starting to pull back with SPX 500 trading at new highs of the day. So we need to take that in consideration. They will not, they are not completely correlated. They share the same momentum, but they are not correlated in terms of price action and in terms of patterns. Sometimes we have the luck to see the same patterns or similar price behaviors on both, but it's not so usual as you may think. At this point we have these bullish crab pattern printed at 15,312 or 312. So basically we have a new support below, completing this sequence, and as you can see we are already the DAX is rejecting this previous channel trend line support. So we need to see a recovery of this structure again in order to assume or start to make some assumptions that okay, eventually the DAX will trade even higher. So I do expect that to happen at some point, and I don't want to see a retest of these lows again for the German DAX. If that happens, that will threat with new lower lows below that support. So, and let's finish for today with the Nasdaq, and I shared this one also yesterday on my Twitter, and this is one chart that I shared before from this structure. Once the price starts to print this this kind of an exchange or expanding triangle there, so once the price starts to print that pattern, I started to project this pattern above. So assuming that as soon the price breaks above this small triangle, we may see the price trading higher. So what happens at that point is the market, instead of trading above the triangle, comes down and then finally breaks above. So, and I don't care what the market will print here. I don't trade based on those sequences. I prefer to wait for those advanced patterns. We have a few of them before. We have patterns printed here. Let me try to show you that. If you want to go short with Nasdaq, you short the golden fib, right? If you want to go short with the Nasdaq, you need to short the golden Fibonacci levels. Actually, not this one, I'm sorry. Exactly, a major one. And we have also this one. All perfect sequences for the Nasdaq. Another one here, very small one. Golden Fibonacci as a support, nice bounce, targets achieved, new lows. Golden Fibonacci as support, bounce, double bottom, violation of the neck, a reinforcement or a retest of the neck below this triangle, and then a bounce. At this point, this is exactly the same pattern. This is exactly the same pattern we can see actually not only here but also here. This is a deep crab pattern. This is let's change this color. This is a deep crab pattern, a bearish deep crab pattern printed at the golden fib. This is a normal, let's say, the bearish crab pattern. So it's not a deep crab pattern because the market or the price didn't push to this 88.6 or 78.6% Fibonacci retracement level. The difference between a deep crab pattern and the crab pattern, the default crab pattern, is exactly this swing, this internal swing being pushed to the previous structure highs or not. That's the difference between the deep crab pattern or the crab pattern. So that's the only thing that distinguish both the sequences. So what we have here, it's exactly the same sequence as we have before. So the crab pattern, the golden Fibonacci level projected there as potential resistance, the same Fibonacci level as we can see multiple times in this chart. So at this point, I will not be surprised to see the Nasdaq starting to feel some pressure once it approaches this price zone, and we are already approaching that price zone, threatening the violation of this trend line resistance, or the most recent, it may look like an ascending wedge kind of, but well, let's see how the market will react. I want to see if the Nasdaq starts to pull back after completing that pattern, and in fact that may offer a nice opportunity to go short. And of course, as we don't have previous structure highs to guide and to try to help us to where to put our stops, we can use our default expectations and create a situation to try to get some type of involvement here. So you assume there's a shark pattern or a crab pattern completion point at 14,384. That's your entry point, and you assume the market will fall back to the 38% Fibonacci retracement level. So that represents nothing more than 3.9%, let's say 4% fall expected. So that being said, we never enter the market to lose more than what we expect to win. So which means we never enter the market with our stops positioned in a price where you will lose much more than what you will win. So it makes no sense, because if you need to repeat the process to trade the markets, you need to repeat that process every day or every trade that you push. And if you repeat this process only a couple of trades, and you will burn your account for sure if you repeat that process, and if the price goes against you more often, okay, which is not difficult to find sequences inside the market where the price will hunt you constantly. That being said, I never enter the market to lose more than what I expect to win. So basically, I want to see a situation like a one-to-one risk reward as a maximum risk reward to use in this setup. Okay, and because I don't have previous structure highs and or previous structure resistance and supports, we are trading at historical highs at this moment. So basically today we have new historical higher highs for the Nasdaq, which we don't, and because of that we can't that doesn't help us to adjust our stops accordingly to the previous highs or lows, you know. So you just need to use the potential reward for your trade. So if this is a bearish shark pattern or a bearish crab pattern, you just need to wait for a 38% Fibonacci retracement. That's what you will wait for. And I can use that range to say, okay, if I don't enter the market to lose more than what I expect to win, so this is my maximum range. So this is my maximum limit to use in this specific setup. Now, do I need to use that that all these range to protect my shark pattern or my crab pattern. So usually I don't need to use a one-to-one risk reward, because by default I want to see a clear reaction as soon the price touches that Fibonacci extension level. I don't want to see the price trying to scale in a very fashion way, moving up. So I need to see a clear reaction. I need to see the price targeting or trading that Fibonacci level and starting to fade or starting to fall immediately. That's what I need to see, not what the market will do. I don't know what the market will do, but that's what I need to see. And based on that expectation that I create for those sequences, I don't need to use a one-to-one risk reward. I can try to use a 1-2 risk reward approach. Okay, I can split this in half. You can use your Fibonacci's if you want. Search for that 50% after finding a 1% one-to-one risk reward. So, and this is your 1-2 risk reward approach. So basically, for each dollar that you lose, okay, for each dollar you lose, you win $2. Okay, so that's my objective for the Nasdaq, is to see if the price completes that sequence, which may offer me a decent and friendly risk reward to try to trade a specific pattern. I'm not saying this will be the short of the century, which will and I will become a millionaire after that. That will not happen for sure. I want to see if the price completes the sequence. First of all, if the price completes the pattern, and if completed, I can try to apply a strategy to try to take advantage of that pattern. Thank you for being here, and it was a pleasure to share my views with you, and see you here the next days ahead. See you there.